All right, Jerry. So we're back one more time. We want to talk a little bit about investing,
Okay.
and we do a lot of Robinhood investing on the channel. We talk about Robinhood because it's free investing, and
Sure.
you don't have any of these charges, which is great. But then we were talking also about, and I made a video about whole life and the cash value that you developed there over the years,
Yes.
and the extra money that you actually invest into that whole life, and then it becomes actually like a little bank for you.
It
And
does.
tell me what you think about those things.
I love those vehicles. I love those vehicles. There's when somebody comes to me and talks to me about life insurance specifically, there's term and there's permanent. The how I like to analyze it is, okay. Term is sort of like if you're renting an apartment or renting a condo or a house. It's yours, but for a certain period of time, whether it's a 5-year term, 10-year term, 20-year term. What happens after that, though, is the only way you can benefit from that is if you die.
Right.
And but certainly we want to take care of our kids, but we also want to enjoy the fruits of our labor.
Right.
Now, on the permanent side, it's a cash value life insurance, and it's permanent because it's yours. It's like if you own your own home. Certainly, a portion of it goes toward upkeep, repairs, like a normal house does. In this case, the analogy is you're paying for the cost of insurance, certainly, but the other part of the money that goes in there, because it is more expensive,
Right.
but it goes toward an investment plan for you.
Right.
You're putting money aside for you. And if you do it consistently, and if you do it for the same, say, after 20-year term, that's all. Then you have to reapply again. And now we're 20 years older, 20 years, probably, maybe now we have some medical issues. Maybe now in my case, we gained weight. You have different issues. So it becomes harder, or at the very least, more expensive to
Right.
get that.
Yeah.
Now, on the permanent side, on the cash value life insurance side, you do it in the beginning, and if you have it for 10, 20, 25 years, you don't ever have to reapply for another medical exam. And all that accumulation that is set aside, if invested wisely and conservatively,
Right.
it'll be a great piggy bank for you. And that's what I tell people. That is one of the best hidden investments that people don't talk about, because you have a lot of these financial professionals say, oh, no, just buy the cheapest term you can and then invest in mutual funds and invest in that. And it works great when the market is doing great.
Right.
And then it tanks, and what happens then? And then it tanks at the same time that your term policy expires,
Right.
and now you're paying through the nose, or you're not insured. It's a whole bunch of negative things can happen.
And so those are the negative things. Now, and you still have a whole bunch of people out there that think that whole life is a terrible insurance, and people tell them, oh, it's terrible, don't buy whole life. But there's so many hidden benefits to having a whole life. We've paid off a whole life already, so that's already there
Right.
for the family for the future.
So the death benefit is there.
It's there, but the cash value has allowed us to invest into things that otherwise we would not be able to invest into.
And it's not just for investment purposes. In your case, that worked out great.
Yeah.
But I know a lot of families, my clients, that have used it to help pay for their college tuition for the
Right.
kids,
Yeah.
or for their grandkids, or pay on a second home, a vacation home. Again, it becomes your own personal piggy bank without any rules or restrictions that, oh, you can only use it for this, or you can only use it for that. No, it's your money.
And talk about kids. The person that sells the Mass Mutual insurance that we have, I think he has insurance on his kids. As soon as they're born, you get insurance on their whole life insurance.
Yeah, and
Very
again,
cheap at that point.
a lot of people think, oh, that's so macabre. I don't want to think
Yeah.
about that. It's so, but no, that's different. Term life insurance, yes, the only benefit is unfortunately death.
Yeah.
With this kind of insurance, no, it's designed for life, and it's designed for long term. So imagine what a gift you're giving your child.
Right.
That at the time you're saying, I believe that you're going to do so well, you're going to do this. I'm going to have something for you that you don't have to worry about paying for your college. You don't have to worry about this. Or if you're going to get married, we have, it equates to having something for any important life function that comes up.
Not only that, but when they get old and they move on,
my God,
then
it's-
their family has that money as well. So
And it's an asset. For
amazing.
example, one of the questions that you see and that I've seen some of my clients that are business owners, when they're applying for a loan or a line of credit at a bank or financial institution, one of the questions there is, and when you're listing your assets, is what's the cash value of your life insurance?
Right.
They don't ask you how much term that you have.
Right.
And so imagine if you, in your case, that you've had it for 20 years, you can put a nice number there, and it just makes it much easier for the bank to say, okay, if worse comes to worse, he has an asset that he can use to back up this line
Right.
of credit.
Now, talking about banks and borrowing money, so the way we go about borrowing money or using our cash value is by borrowing from the company,
Correct.
and therefore you're really not.
You become your own bank.
You become your own bank.
Absolutely.
And what's the beauty of that is that you don't even have to pay it back if you don't want to.
No, you don't.
Yeah.
That you can borrow against it, and it becomes a tax-free thing. All it does is maybe it reduces your death benefit or whatever. But again, you are using your money. You are lending it to yourself, or you can just take it out of there,
Right.
and it's tax-free.
And ideally, I think you would want to pay it back. That way, you have it there again
Yes,
to use.
but again, it's that flexibility is what I
Right.
love about
Right.
it, and that's what a lot of people miss because they are misinformed or they believe bad information that's out there. Let's try it. Let's do an analysis like anything else. Is it good? I believe it's good for everybody, but let's do a situation where we examine. Okay, what about this fits your needs, your goals? Before I meet with anybody, I ask what their goals are because it's not what my goals are. It's not what I believe. It's what they want. What's important to them about their money and their future, and then we can make sure that this is a good fit for them. But I've seen it work for a lot of people, and
Right.
and a lot of people, famous people, have used this type of strategy.
Right.
It's just not advertised.
Exactly, it's not advertised.
Well, because insurance is not sexy.
It's,
You know?
Yes.
Unfortunately, that's.
But if I could go back 24 years, 25 years, I would have bought whole life insurances for my kids because that would have paid for their education. I wouldn't have had to worry about anything at all, and with money to spare.
Right.
With money to spare, and it's amazing what it can offer a family, an education.
Absolutely,
child.
and those are excellent things because obviously we want to provide for our kids. But let's look at another thing, Dave. A lot of times, and especially people our age are beginning to realize this, and especially the next generation coming in after us, we don't know what kind of Social Security is going to be out there for retirement. We don't know if a lot of companies are going to be offering 401ks or pension plans.
Right.
So what kind of retirement are they looking forward to? I don't want to have a retirement where I'm depending on the government to tell me, okay, you qualify for so much. But you know what? In our lifetime, people were retiring at 60. Then it got pulled up to 62, then 65. Now they're heading towards 70.
So you can't retire anymore.
So people are extending on that. What's going to happen 20 years from now? Again, I'm not saying gloom and doom that we're not going to have Social Security. I'm saying, are you going to have to work till you're 80 to get it?
That is-
So we need to look at different alternatives to supplement our retirement and make sure that it is a good retirement, not a retirement where we can't go out to eat or where we can't go to the movies or have some sort of entertainment. A retirement that you deserve. And does that mean that we have to take the bull by the horns and be responsible for that? Yes.
Yes.
Is this a good product for that? Absolutely.
It's the best I've seen.
Absolutely.
It's the
Yeah,
best
I
I've
agree
seen.
with you.
Yeah.
I agree with you.
And that's something I just want to share with everybody because I think, I think at every age and everybody should kind of jump on that bandwagon because that's going to secure your lifestyle in the future, how you're going to live,
On your
what
own
you're going to
terms.
have, on your own terms, on your own terms.
I've been doing this and I've been blessed. I've been doing this since 98. And that's the best thing I recommend to my clients. Now, is it gonna be good for somebody that is just starting out or maybe can't afford it. No, but again, that's where the planning, that's where we do a lot of stuff that gets us to that. But that to me is that final exam that we want to be.
Yeah. But for those young parents out there, think about that whole life for your kiddos,
Absolutely.
man, because that will set
And
them up.
that is not expensive at all because again, it's based on their
Yeah,
life. It's just
how
healthy they are.
you
So
know, and so it's going to be very inexpensive, which is perfect.
I agree.
Jerry, thank you so much for taking the
That's
time.
my
man.
honor. Thank you so
And
much. I
it's
really
been-
enjoyed it.
I know
Really enjoyed
we
it.
really used you today for a lot of topics, and it was awesome, man.
I really have enjoyed it.
All right,
Thank you.
Thank you, Jerry.
Thank you, Dave.